Hello and welcome to another edition of BCR Webcasting. I'm very happy to be joined today by Mansour Davarian, who is Managing Director, Co-Head Transaction Banking Solutions at Lloyds Banking Group. Mansour, welcome.
Hi, Michael.
You're going to be talking at our forthcoming UK Invoice Finance and Asset-Based Lending Summit. Just so everyone knows, that's on the 27th and 28th of February at the Hilton in London at Sign Park. And the particular panel that you're on, Mansour, is about the evolving role of asset-based lending in the private credit landscape. So I just wanted to ask you a bit about that. I get the impression this is somewhere that has been, this has been evolving quite significantly in recent years. And the private credit sector, I think, has been increasingly getting involved in all sorts of areas of investment and finance. So what has changed recently in the UK ABL market, and how has the private credit investment got into this sector, and why?
Thanks, Michael. I mean, that's a really interesting question. I mean, just taking a step back. So I think this is relevant given the fact that private credit is touching across all trade and working capital products as a whole. So I look after our trade and working capital business at Lloyds Banking Group, which includes our cash management and payments business as well. And part of the product sets that we have within the business includes the likes of receivables financing, portfolio receivables financing, contract receivables within asset finance, for example, our invoice finance ABL business, as well as our asset finance business, as I've mentioned. Now, it is very interesting because when you look at the use case for private capital, actually there is a broad opportunity within the various product sets for private capital as a whole. And we have seen significant growth more broadly within lending, right, as well as trade, around the deployment of capital into this space. From a UK ABL market, though, I think it's been a really interesting couple of years. What we've seen is material expansion of the UK ABL market. So we're at above pre-COVID levels at the moment in terms of amount of outstanding funding. We're seeing significant uptake within the SME, mid-corp, and even the bottom end of the large corp segment for invoice finance ABL transactions. So more broadly, there's about 21 billion of funding in the market today, with around 35,000 clients. So if we sort of turn to the reasoning why we're seeing an uptake within the ABL market, it is driven by sort of numerous factors. Firstly, the use of supply chain finance and receivables finance have been in the market for many years. ABL actually predates and has been sort of around for significantly longer. More recently, with supply financing and the cost of supply financing increasing as interest rates have increased, I think what we've seen, again, more broadly in the market, is a reduction in the drawn profile of some of those transactions, right? Especially some of the larger ones. And actually a switch into the use of more receivables financing or secured ABL funding for those corporates that were accessing that type of funding and financing. So we're seeing a significant growth within the market. Year on year, we're about 6%. And that's really driven by, again, the uptake and drawings of and under these facilities. The other thing that we've seen is the use of sponsor-backed ABL solutions. Right. So if we think about sponsors in the market and the use of private credit and private equity in respect to the growth in that segment, actually the use of ABLs is moving into flexible structures that enable and support acquisition purchases as well. So we're also seeing growth in that segment as well.
And so in terms of the attraction for the private credit investors, what are they happy with the returns that are being on offer? I mean, presumably they must be, but what has changed from say a few years ago? Why is this now an attractive area for investment for
So I
them?
wouldn't say there's anything that's materially changed. Actually, my position is that the private credit market has got to a point that actually there is sufficient liquidity for them to deploy across multiple areas.
Right.
So when I think about the private credit market today, so we estimate it to be in the region of 1.7 trillion dollars, right? We expect that to grow over the next few years to about 3.5 trillion, right? So if you think about the volume of capital that is in the private credit space, it is becoming significant to a point that it is able to deploy into these types of product areas. I think the ABL market is interesting. So firstly, again, it is more secure, which typically leads to sort of a more bank-friendly environment. But we are seeing some structures in the market that are releasing some of the securities that are typically associated with ABL products. So this all-asset debenture, for example, in the UK, there are some structures in the market that no longer require an all-asset debenture. And that means you're taking fundamentally higher levels of risk against the assets you're purchasing, be it the receivables, the property, the intellectual property, and so forth. So there is a change in dynamic there. I also think we've seen more sophisticated structures in the UK following movements from sort of large US banks as well as large private credit funds into the UK market. So if I think about the US ABL market, it is significantly larger than the UK ABL market, and there's value to be attributed to the structures they've got in place there in terms of applicability to the UK market as well.
Okay. And how is the bank's approach to private credit investors? I mean, how does it differ from, say, their approach to traditional receivables finance clients?
Yeah, so from our perspective, we view the entrance of private credit as broadly positive. The risk profile that private credit are looking for is a different risk profile to what we look for. So actually, we see there are significant synergies for us working together. Lloyds Bank recently partnered with Oaktree, for example, with respect to funding of acquisition financing, right? So very much on the loan side. Again, when I think about the way in which we can work with private credit, we can originate assets. We have all the relationships. When I think about Lloyds Bank in the UK and our reach in the UK, it is significant. So here it then becomes around sort of how we work in partnership with private credit for appetite that doesn't necessarily fit our own boundaries.
And what about the impact of private credit in terms of your underwriting policies and standards? How has that been?
Yeah, to be frank, I don't think that will change. I think our underwriting policies are our underwriting policies. We may see some flexes on the structures, some flexes on sort of what we're willing and able and capable of delivering. But fundamentally, we have a very different risk appetite to that of private credit. And as a result, this is why I think it is complementary, because we can probably look at transactions that we wouldn't have historically looked at to support our client base because they've got different regulatory requirements fundamentally.
And in terms of the future of this market, I think you mentioned just now that you see significant growth in this area. You see greater demand from the private credit sector.
Yeah, I think it's twofold. I think what we're going to see is, and I'd like to bring technology into the conversation as well, actually, because I think technology is going to drive a significant amount of growth within private credit deployment, capital deployment into this sector. So I think what we're seeing is as technology improves, as data visibility improves, as view of expected loss, performance, and so forth within some of these portfolios improve through the provision of that data, what we are going to see is a much cleaner view of risk and much more visibility on the underlying risk that these transactions are taking, be it from a pooled asset basis or even on an individual counterparty basis. And I think that will drive investment not only from the banks and from ourselves, but also from the private credit market. Because you are able to then look at risk tolerances, what you're willing to do and what others are willing to do, and actually find solutions that meet our client requirements.
Yeah, it's interesting. I mean, you can hardly talk about any sessions at conferences these days without technology coming in somewhere, and it's clear that it's going to have a dramatic impact on this sector in the coming years. Mansour, thanks very much for your time today, and we'll look forward to hearing a lot more, I think, from you and your fellow panelists at our UK Invoice Finance and ABL Summit, which will be in a couple of weeks, in fact, 27th to 20th of February, at the Hilton, London, Scion Park. And we look forward to seeing you again there. Thanks very much indeed.
Perfect. Thanks, Michael.